All right. Welcome, everybody. Welcome to the Blueprint. This is Malcolm Fields, broker owner, M73 Real Estate. Um, just want to hop on real quick conversation I was just having and with someone about interest rates, right? And I wanted to hop on just to give you some information about interest rates. Some people that's on the fence. Some people tiptoeing, getting ready, scared to get into the market. Understand in Illinois right now, the market interest rate is about 6.8%, right? Uh, it's higher, right? It came down a little bit, then it went back up, but 6.8%. It's not terrible. That is not a terrible rate. Um, Number one, don't waste time sitting on the sideline for that rate to come down significantly. It is not going to happen. The best advice I can give you, and you can research this on your own and talk to your financial advisor, is just to get into the market where you can. And then when rates do come down, you can certainly refinance at that time. But you want to be able to get in now so you can begin to realize the benefits of home ownership and the benefits that it brings with it, right? So get past that point. But one of the things I did want to talk about is the baseline market interest rate. 6.8% is like the baseline market interest rate. A lot of factors come into play when it determines where your interest rate is going to settle when you out trying to pursue a lender and try to capture get a hold of a mortgage, right? It's going to determine where your rate is going to settle. So even though the baseline market rate is 6.8%, that doesn't always mean that you're going to settle at 6.8%. Your credit score is going to come into play. The amount of money you put down is going to come into play. Typically, if you put down more than 20% and above, there's going to be a conventional loan that's going to be less of a risk to the lender on your behalf. So your interest rate will be closer to that baseline rate because the bank, with you putting up 20%, the lender has less of a risk in with you involved. Anything under 20%, the risk goes up and the bank is going to, and that mortgage rate or interest rate is going to be higher than the baseline. So typically, when we see programs like the FHA program, we only putting down 3%, or some other programs where you putting down 3 to 5%, your interest rate probably will be higher than the 6.8 because again, credit score is going to affect that. How much you put down, the percentage of your down payment, those things are going to come into play. Other things that will come into play that can affect it also is where you purchase your home, right? Markets and locations also can change and can change or elevate that baseline interest rate because it becomes a riskier buy. If you're buying in a pricier neighborhood, it's a riskier buy versus interest rates for properties that's in a neighborhood that's not as pricey. So you always have to think about that. So if you, in comparison, if you buying a property and Wilmette, you need to really come strong. If not, the price of that property is going to really drive up the baseline interest rate. If you don't come strong, your debt to income ratio, and all those things. So I would encourage everybody, always talk to your financial advisor, always talk to your mortgage lender, understand exactly where you are, understand what your own personal market interest rate sits as it stands now while you're searching for your home. So we look at the 6.8%, and then you get your truth in lending statement, or the a mortgage lender comes back with a number, and that number may be 7.2 or it may be 7.5, a little bit higher than the 6.8 of the average right now. You might so always be careful of that. Um, Even dealing, sometimes you might be better off or get a little more of a break dealing with a credit union who might be able to beat the market interest rate as it stands now. So you might go with a credit union or with an institution who might go a point or maybe a half point below what the market's baseline is at 6.8. They might go to 6.4, even to 6% on a home mortgage loan. So always shop around, always understand what the baseline market rate is, where you stand personally with as far as your own personal baseline market rate, and then also understand what the lender is willing to do based on the programs they have, based on what the service that they are able to offer you in order to get you into that home. I always encourage people, you are in control if you're ready to buy, right? Shop around because you're investing in this property for years to come, right? So make sure that your lender that you're working with, that they are ready to offer you every program that's available out there to you to take advantage of to get you in the best position that you can be in as you prepare to buy. So those are the good things to know as we move through this housing market of 2026. We're halfway through the year, more than halfway through the year. Those are good things to know. Control your debt to income ratio. I can't stress that enough. I cannot stress that enough. You have to control your debt to income ratio. The more debt you have, the less of the home that you can buy unless you're paying cash, unless you're putting down the money. So control your debt to income ratio. Also, you have to be able to control what you're spending your money on at what time you're spending it. I always say before, I've said it again, I'll say it again, I'll say it again, I'll say it again. Don't jump off into a loan, a loan, a personal loan, a finance loan. Don't jump off into those type of loans while you're trying to get yourself ready to buy a home. And the bank and is the lender is going to be looking at what you're doing financially during that period that they're trying to get you approved. So you have to be aware of that. I've had clients say, I want a house, and they get ready to go get themselves together. I put them in contact with a lender. They're moving, getting things done to get a house. As soon as the lender starts to work with them to improve their credit score, and they see the credit score get good, and they haven't bought the house yet or haven't got approved or just got pre-approved, they run to the car lot and buy a car simply because their credit went up. And now that car loan is sitting on their credit, and now they upset because they can't afford the house that they wanted because now that loan has changed their debt to income ratio. So you have to be smart about it. You have to be smart. Buying real estate, getting invested in real estate is a long-term play. It's a long-term play. Getting a car is a short-term play. Long-term play for real estate, right? You get more value out of the real estate versus buying the value you get out of the vehicle, right? So you might have to drive uh I ain't gonna call it a hoopty, man, but you you have to drive the not so pricey vehicle until you get your home, right? Just let's do this the smart way. We're losing out on a lot of opportunities to really realize what the generational wealth and that change can be like because we're trying to make plays that are unnecessary, right? And they're more about showing off to other folk what it is you're doing instead of putting yourself in a position where you can change the lives of you and your family to come when as you start investing in real estate and seeing what the benefits of that could be. So again, just on here to encourage you. It's been a while since I've been on, but I've dealt with this a lot over the last few months of people not understanding what the situation is when you come up with your own personal interest rate. The baseline market rate does not necessarily mean that you have to put yourself in a position with all the tools out there to even beat it in some cases or get not that much more above it based on what it is you're doing and how you're yourself to the lender. So always talk to your lender, always talk to your finance, all the help that I can. Certainly reach us at m73realestate.com. You can get us on this YouTube channel, M73 Real Estate on YouTube, and drop us a line and we will get back to you. But hang in there. Everything will work out and we're going to get you to your next destination. Once again, this is Malcolm Fierce, M73 Real Estate. Holla at you. I bombed.